I mean, there was a huge change in the direction of capital going into crypto in the last 6 months. So what's changed now is most of the investors that are willing to take the highly speculative investments, and some of them are large, a new deal called Miston, M-I-S-T-E-N, just got funded. Evan Chung was the name of the fellow who left Facebook. He was doing their digital currency. He took the whole team, set up a new company, raised $300 million in 45 minutes, basically without a deck. FTX was the lead investor at $100 million. I put money into that deal. He is promising a new blockchain to service financial transactions at 10 times the speed of anything else out there. And we do need that. So there's a lot of interest. But there's an example of a have company that really has no revenue. It's just starting its journey with now 300 million. It was almost 6x oversubscribed. The rest of the crypto market that came out of the DeFi space has been obliterated. And financings there are being done in crammed down rounds, 40, 50, 60, 70, 80% less than the last round. Very, very difficult. If the company's not profitable, there's not a lot of investor appetite for it. So you have the haves and the have-nots. In addition to that, the whole Web3 movement, which was what that whole conference was about, is more towards mass adoption. Everybody that's investing money into that is trying to solve for the wallet, number one. Number two, security. And number three, regulation. Those are the three horsemen of the new Web3 movement. Mass adoption through regulation, through security, and a much easier to use wallet. Well, the inflation fears come from the CPI number, which was over 8%, and that is inflationary. However, there's a new narrative going on in the market with investors regarding how the CPI is constructed. 40% is in shelter, and shelter stats are notoriously long dated. In other words, the numbers you're seeing now reflect the shelter market, the housing market, the apartment rental market 18 months ago, when it was smoking hot. That is not the case in major cities now. Rent increases have slowed down, housing prices have softened as mortgages have increased, and yet it's not reflected yet. So it's a little bit of saying, I want to change the data set now because I don't believe it anymore. That's kind of one narrative. But even though it's sitting at over 8%, the market is willing to fibrillate, waiting for more earnings validation that we actually have a slowdown. It's simply not there yet. And so if the Fed keeps using this 8% number and keeps ratcheting rates, they will overshoot. I also have the benefit of tear sheets from 56 private companies. We've seen no slowdown yet. A highly unusual situation going on here, given how much the market is corrected, anticipating slowdown in earnings and a recession and a Fed gone wild with another 75 and potentially another 75 after that. None of these rate hikes have affected the consumer yet, and I speculate it's for one singular reason. No economy has ever printed $6.72 trillion in 30 months. That's basically turning on the printing presses, printing money, giving it away for free, dreaming up other reasons to give more money away for free, such as student loan forgiveness, and then the Anti-Inflation Act. That's just hilarious to call it that. It's very inflationary. And so at some point, we'll have to stop printing money, but it hasn't happened yet. All-time record deficit. Consumers flush with cash, and these earnings are proving it out this week. If we're going to get a slowdown in earnings, it's probably going to be in Q1 or 2 next year, because it doesn't look like it's going to make it this quarter. And as a result, we've got a really perplexing, difficult time for investors. Money into that deal. He is promising a new blockchain to service financial transactions at 10 times the speed of anything else out there. And we do need that. So there's a lot of interest. But there's an example of a have company that really has no revenue. It's just starting its journey with now 300 million. It was almost 6x oversubscribed. The rest of the crypto market that came out of the DeFi space has been obliterated. And financings there are being done in crammed down rounds, 40, 50, 60, 70, 80% less than the last round. Very, very difficult. If the company's not profitable, there's not a lot of investor appetite for it. So you have the haves and the have-nots. In addition to that, the whole Web3 movement, which was what that whole conference was about, is more towards mass adoption. Everybody that's investing money into that is trying to solve for the wallet, number one. Number two, security. And number three, regulation. Those are the three horsemen of the new Web3 movement. Mass adoption through regulation, through security, and a much easier to use wallet. Well, Biden has to talk his book because he's only weeks away from a midterm where he's threatened right now to lose the House. Nobody knows what's going to happen in the Senate. What they wanted to have happen was that there's some indication of a slowdown in inflation. They didn't get that. And their gas prices in some states are on the rise. That's never, ever good for the incumbent, regardless of what party they're in. Inflation really kills you at midterms, and that's what they've got. So also, if the Fed raises another 75 basis points before, which they will do before the midterms, that's not helpful either. So it's a really difficult act that he has to, higher wire act he's got to do. Biden's got to talk his book and try and keep as many of his candidates in the game as they can. You know, when we talk about politics, abortion was the issue, and that seems to have been shifting now in the last few weeks to inflation and the cost of protein like chicken and food goods and gasoline back in the fray again. So, you know, these things are binary. They're very difficult to call, but it does matter to you as an investor what happens in the midterms. There's no question about that. I don't think anybody's going to give him A+ for foreign affairs at this point. Been a lot of mixed signals. We started with the Green Initiative in the US. We gave up our oil independence. That blew up in everybody's face in the form of high gasoline prices. Now he's talking to dictators in Venezuela, flying over to see the Saudis, asking them not to stop production. They don't care, it's obvious. That's not great. But at the same time, it does make us do a little soul searching in the US about getting back to energy independence, and there's a lot of pressure on that, given what's going on in Germany. So all of this ends up being a market consideration. Right now, oil is being capped in price by those bears that are concerned about a global recession and use of energy. But not every country is buoyant with the consumer as the US is, because the US dollar has caused lots of headaches in other currencies. You know, when you look at the value of currencies in other nations against the US, it's getting very, very tough for them. And so there's a lot of cross currents here, but right now, people are focused on the Fed, they're focused on the midterms, and all of this is going to play out in the next 5 weeks. So stay tuned, it's going to get really interesting. Remain strong at times of uncertainty and war, and we've got 2 wars going on, the Ukrainian war and the war with China, the economic war, and the threats as we build up more tariffs. We stop selling them chips for AI. You know, this, at some point, these 2 sides have to come to the table because there's too much to lose. But there's a war going on there too. That brings a lot of instability. It certainly crushed the values of Chinese stocks, which are starting to look very interesting. These are companies, in some cases, growing still at 30% that are trading at almost single-digit PEs. Not yet, but getting close. Well, in the polls, and all of us buy services that are investing to get this data every day, they're about 6 seats ahead. And I've learned in the past that means nothing. There's no guarantees on anything. But right now, that would be the House. You can't call the Senate. So let's say the House flipped. The good news on that is all new bills, all new initiatives that are not bipartisan bills, in other words, ram-a-jamma down your throat bills like the student debt thing, ram-a-jamma bill like anti-inflation bill. I mean, nobody wanted to vote for that on the other side of the aisle. So those kinds of bills are dead for the rest of this presidency. There'll be total gridlock. And that is a good thing. The markets love gridlock. Markets like a pause that refreshes. We need a pause. The printing presses have gone insane, and that's why we have inflation in the first place. I mean, for all the talk about inflation, you print $6.72 trillion in 30 months. What the hell did you think was going to happen? Of course there's going to be inflation.
Do you agree that price doesn't matter in the short term? Leave a comment if you found the content interesting. Click in like button. It really helps the channel find viewers similar to you. If you're new to the channel or haven't subscribed to it, click in subscribe button. We post content daily to keep you up to date on the current market and news. Thanks for watching. See you in the next video.